Of the day, life insurance. Should I get it for my baby? Yes, no, and why? Now you should get it for your baby for a few reasons. One, nobody knows what the future holds. For example, if your baby is right now the baby, but it goes in the future, what happens is they got an illness and they get uninsured. Then they can't get life insurance later in the future. So it's beneficial to get it when they're younger. Plus, it's cheaper when they get it than when they're younger. You have to pay less money for the same amount of money you have to pay in the future, right? For example, even like yourself, right? At your age, you're probably going to have to pay around $250, $300 for life insurance. For the same amount of money that you're going to have to, if you did get for your baby, will be around $50 to $100. Even if you put extra money in and the money is growing, at least benefits your kid in different ways. One, they don't have to be insured later on, so they already have a life insurance. Two, maybe in the future they have an illness or something happens to them, they'll get uninsured. This way, they have a life insurance. Another thing, the money that's growing inside of it on a permanent insurance for your kid, the money is growing on a tax-free basis. So it acts like a savings account. Once they're older, they can use the money for their own schooling. Plus, in the future, if they don't use it right away for schooling, they can use it for purchasing a vehicle for themselves, first vehicle. Maybe down payment for their own house. Or even they can take out the money out of that same life insurance to purchase and start a business. Where you don't have the opportunity right now, but think about it this way. You're giving them the opportunity when they're young. Yes. Why? Because they are young and they have a lot more time for the money to grow inside the life insurance. As you get older, you have less and less time for the money to grow. For example, like you might have maybe 30 years, 40 max, whereas the kid, a baby, will have rest the whole life. They can go up to 80, 90 years of money growing inside of it. They can use that money as they see fit. They can use it for collateral for purposes. Once they get a life insurance house, they can use that life insurance for the collateral. They don't have to get mortgage insurance. Plus, once they get to age of 65, they can take the money out once they retire, and it's on a tax-free basis. Take it out, and it doesn't affect their CPP or their old age. Isn't that a benefit would you like for yourself plus your kid? You can use the money also yourself, because since you are the benefit person or the person who's paying for the life insurance, you can withdraw the money out for your benefit too. In case for your retirement once you hit, then still remaining money still for your kids. Plus, that money goes to the next generation also after your kids. So you got your grandkids will benefit from your money also that you're going to be investing in for just 20 years in the beginning. Think of it. You benefit, your baby benefits, and your great grandkids will benefit, and so on, from the same amount of money that you can be investing when they're younger. Versus when they're older, it's a lot more and a lot harder to do.